It's kind of like a crypto payment pioneer, a ICO fractional ATM proprietor, and a logistics trucking guy all walk into, and an accountant all walk into a crypto show. So we have a very diverse panel. But in addition to that, a lot of great background. So even though what each of we do today is a little bit off the topic of payments, there's a lot of experience up here on the panel, payment experience in both traditional as well as crypto. But I guess we're probably not going to get Rick, so should we just get it underway? What do you say? Okay, I'll start off by introducing myself. My name is Steve Beauregard. I've been around the industry for 6-7 years now. Started back in 2012. I founded a company called GoCoin back then, which was a competitor of BitPay and a competitor of Coinbase in the merchant processing space. GoCoin was a little bit different in that we were raising our Series A during Mt. Gox. And so we didn't have the luxury of some of the other guys who were a little bit better funded before Mt. Gox occurred. And so we had to be a little bit more thrifty and take a bit of a different approach. But in the time that I ran GoCoin over those 4 years, we processed about $100 million of crypto payments across about 4 blockchains. So we were the first to enable payments beyond Bitcoin onto other crypto platforms. And so recently I've also joined the company Bloq, B-L-O-Q, doing more in the enterprise space. And in addition to that, I get involved with a lot of startups and a lot of ICOs, new projects. Some of the ones I'm advising on include the Academy token, which is about education. One called Aux token, which is for networks of auctions. A new one that hasn't released yet. My company Bloq is releasing a new foundational cryptocurrency, which is meant to be for payments, and that's called Metronome. And you can find that at metronome.io. And then finally, I've recently started advising the company Nexus Earth, which is a quantum-resistant blockchain that has a lot of really exciting features at scale. So that's sort of my background. I'm going to turn it over to David to talk about where he's coming from.
Hi, my name is David Gosselin. I'm a partner and CPA at DBBMcKennon. We're a full-service CPA firm. And honestly, as we're at the booth today and yesterday, we get a ton of tax questions. But actually, my area of expertise over the last 2 years have been audits and reviews for companies that are using the Jobs Act through Regulation A+ or Reg CF. And so we're one of the top CPA firms in the nation if you're an issuer looking to do one of those things. And that's become extremely important to people out there like you who are looking to kind of tokenize something or create a token. Because just as Aubrey was saying in 2 panels ago, there's STOs are coming out and the floodgates are starting to open. They're replacing ICOs, but they have to be done compliantly, and that's usually through Reg D, Reg CF, or Reg A+. The thing that I always talk about and why it's important, the Jobs Act, is because most companies that issue tokens don't want their tokens to be held by 10 rich dudes in Silicon Valley. They need their tokens to be owned by the masses. And you can't do that through Reg D. You have to do it through Reg CF or Reg A+ to be able to sell to the unaccredited investor. So it's a space that's ever evolving and a whole lot of fun.
I think a lot of people forget about the other reg, which is Reg FU. And that's the one where you just say, forget the United States. We're just going to do it all overseas. And I don't think there's been a lot of talk about that. On the panel yesterday, they talked a little bit about, if you're doing things offshore but you live in the U.S., that you're doing something shady. What's your opinion of that?
I'm not a securities attorney, but I always heard if you're selling to a U.S. citizen, then you're by default part of the securities laws here. Just like if you're a U.S. entity and you sell to someone that lives in Singapore or Canada or whatever, you become attached to that country and their securities laws. So you have to make sure you're doing anything compliantly. And I've heard a ton of people come by the booth and they're saying, we will not sell to Americans.
Yeah, and I think that's pretty logical. It's an unfortunate situation. I wish that our regulators and government could get out of our way, so to speak. It's a little bit unfortunate. But let's move on to Sebastian. Sebastian, tell us a little bit about what you're up to, and then you also had quite an interesting past in payments.
So my name is Sebastian Korbach. I'm from Germany, and I'm the founder of Trilliant.io, which is a company that produces and runs a network of cryptocurrency ATMs in Europe with focus on Germany. And my background is actually, I'm coming from the payment industry. So I had a payment company before in Brazil, and we were processing. I can talk about it later about it a little bit. Yeah.
Great. Yeah, so one of the things that really hurt payments in cryptocurrency in particular, especially in the United States, once again with regulation, back in 2014, the IRS sent out guidance which, Bitcoin was going to be taxed as a property. And what that meant is even your, small cup of coffee that you bought for $5, if your basis was a couple cents in that, you would have to pay a gain on that. So from an accounting standpoint, have you seen, do you have any clients that became an issue for?
Yeah, this year, probably the last 6 months, I'd say we get a lot of intake from people that are looking for tax advice. Anywhere from someone that said, I made a couple $1,000s in 2 transactions. Great, easy, no problem, we can handle that. To one client that came to us with an Excel spreadsheet 10,000 lines long and said, I owe tax, I just don't know what to do. And we're looking at him like, what can we do with this? There's a lot of information here. And that's, from my standpoint on the regulations side is, what everybody talks about is utility and security, over and over, every conference. Nobody talks about, hey, it's going to be security, and then what happens, right? And then what happens is there is no accounting system, there is no QuickBooks, there is no anything to track the gains and losses right now on a tax perspective and on a GAAP perspective, which Regulation A companies and Reg CF companies are going to need. So what I always predict is you're going to have all these companies raise these security STOs and raise all this money, and then within a year to 2 years, they're all going to fall flat on their face because they didn't think about what was going to happen with the accounting, and they can no longer be compliant. And that's when, the regulators are going to come after them again.
Yeah, and then that's really painful. I mean, I have a ridiculous spreadsheet that I've been tracking, ever since I started buying coins back in 2012. And the hard thing is when you then go into other coins and so forth. And I know there's some tax loopholes that they've now closed. But to me, it really seems like the way that you're using should be regulated different based on what you're using it for. For example, if you're buying something, you're in Singapore and you're an American and you want to buy, there's a couple bars down there where you can buy beers and so forth. If you're buying beers, that's really no different than going to an ATM, getting out Sing dollars and using that when you're really just trading your US dollars for Sing. So in that situation, I think for these de minimis kind of payments, that we're really doing ourselves a disservice by even claiming the tax on that.
But I think that the fallacy of that argument is then you'll find someone that will figure out how to do hundreds of millions of microtransactions to kind of skirt the system and saying, hey, if it's just a small transaction, who really cares, right? So that's the ultimate reason why there needs to be some kind of regulation. I agree. I don't see Bitcoin as anything different than a dollar. It's just a medium of exchange for the fair value of services, what you and I agree upon. And it's unfortunate that they're kind of pegging it to one thing, but they have to do something, right? They have to take a stance.
Yeah, but they can also just build structuring into that and say you can't structure payments in this way, and if it's done that way, then in bulk, that you're breaking the rules.
You're just having more regulation, which is kind of...
Sebastian, you've done a lot of cross-border stuff.
I can maybe give you a good German standpoint, which is that Bitcoin is taxed like gold. So in terms of spending it on little stuff, you don't pay any taxes on that. And in terms of like investing, in Germany, you just pay normal taxes on your profit and losses, unless you hold the asset or the coin for more than 1 year. And from that point on, it's tax-free.
Right.
One thing that we talked about recently is that like when you buy and sell Apple stock, Facebook stock, is what's called a wash sale. And so if you buy and sell it within a 30-day time, it's basically considered your basis carries over. So if you do think about if you did something with Bitcoin, it was considered some kind of security, or you were trading someday with a security, theoretically if you're buying and selling it regularly, your basis may not change because it's essentially a wash sale.
Right, that's a good point. So, Sebastian, you've done a lot of cross-border payments. I mean, let's face it, for making payments within the U.S. when you have credit cards, it doesn't make a whole hell of a lot of sense, especially if you're holding the digital currencies for speculative purposes, to use that in the transaction, especially if you're going to get taxed on it. But for cross-border payments, that's where there's a lot of friction. Tell us about some of your experience.
Yeah, so I actually have like the perfect use case for this. So the company I was running in Brazil, we process credit card payments, and mostly for European companies that were selling stuff in Brazil, and very niche, by the way. It was more or less like products, virtual products, software, dating websites, tickets, all these kinds of things. So the companies in the UK or in Germany, they contacted us and said, well, can you be our bridgehead in Brazil and process the card payments and then send the money to us. So in fact, we made money on the transaction itself. Then we converted that from Brazilian reais into euros or pounds, and then we sent them over to the UK. And we made 3 times commission on that. And imagine nowadays, like, if they were using cryptocurrencies, we wouldn't be there anymore.
Yeah.
Yeah.
And so, what do you think, David, in the situation of decentralized exchanges, or like the Aux token platform that I talked about, where they want to launch auctions where your smart contracts handle all of the arbitration of the payment out to the various parties? What do you think the implications are there on the taxes, and how do you track that?
I don't have a good answer to that. Yeah, what I always
Or Shapeshift. Let's take Shapeshift for example.
I guess for me, I'm an auditor, so I want proof, right? And one of the things I talk about all the time is like we have all these companies out here in the ballroom over here, and I always think that they're creating problems to solutions that already exist, right? They're not necessarily game changers. But one of the things that I think really needs to happen in this space, really needs to happen, is when we do taxes, and I'm not a tax guy, but when we do it, we get a statement from Merrill Lynch, from TD Ameritrade, from Fidelity, and we rely on that statement because we know that those companies go through massive internal control checks over and over and over from people like me to ensure that the transactions happen the same way every time, compliant, and get reported the same way every time, all the time. So when we get that, we can rely on it. The problem is now we have these hundreds of companies out there that are crypto everything, Bitcoin everything, and no one's actually checking it. Everyone says that the blockchain is secure. There's smart contracts, but for people like us, there's no check yet. So someone has to create the service organizations that are checked, and to ensure that when they're reporting something to us, not just us, but anybody, government agencies, whatever it might be, that it's happening the same way every time, all the time, with controls and checks in place, because there's always going to be the exceptions, and there has to be a control check for those exceptions.
I see.
So I think there's going to be needs to be a lot more service organizations that are going through those really vetted procedures.
But you see how complicated this is already on a national level in the States. And now if you go internationally, it's virtually impossible to actually combine and line that up.
Yeah. Let's shift gears a little bit. I'd like to talk a little bit about ATMs, Sebastian. And I remember the early days. The first time I ever used a Bitcoin ATM, I was in a coffee shop in London, and I wanted to get my 50 pounds out. So I sent my transaction, and I waited, and I waited, and I waited, and the coffee shop was closing. I'm like, well, you can't close. I haven't got my cash out yet. And so that was my first painful lesson. So I assume we've come a good way in the technology. Another thing that started to be a trend that I don't know whether it's really caught on was to be able to pay your bills via the ATMs with crypto, pay your utility bill or pay different credit card bills, et cetera.
Well, that's also very. We're talking generally, but you always have to look at the national level. And then, for example, in Brazil, people have been paying their bills for utilities on ATMs for years now.
With crypto or with?
No, with normal money.
Okay.
Well, and then again, if you look at Germany, people don't even use credit cards. Like they really don't like credit cards. They want to be in control. And I think even for Visa, MasterCard, it's been like the most painful country of adoption. So now try to get these people into using crypto to pay their bills.
Yeah, well, one of the double-edged swords in crypto has always been the recurring payments. At GoCoin, that was something we were always trying to see how we could tackle. The best we could really do is just send an email out that when they clicked a button, it would launch an invoice, but that always requires them to do something. But the beautiful thing about crypto is you control your money. Nobody's pulling your funds out. You're pushing voluntarily your funds out to them. So do you see anything coming in the ATM markets that can help with those problems?
Well, in the end, it's a software solution. Like it's all software. You can do it easily. It's more of how can you convince people of starting to use it. And then definitely you're going to have countries where you are going to be able to convince people much faster, like Brazil, when they're already used to it. And then in Germany, I think it's going to be a very long process to get.
Yeah, so let's talk categories for a second, like categories of transactions. Recently we've seen at GoCoin an uptick in travel. We have Cheap Air, for example. There's a couple of other like escrow companies that are doing like large portfolios of domain names and things of that. So those are some of the legal we see a lot of. So a lot of people are paying their legal bills now in crypto, and the lawyers want to be paid out in fiat. So what are the categories what are your opinions that you'll see some good trends?
Switzerland, you can already pay your taxes in Bitcoin. So like pretty much the most advanced nation in Europe in terms of cryptocurrencies.
So then when you pay your taxes on it, you have to pay tax on the gains of the taxes, yeah? Right?
No, but even on your normal income, you just send them Bitcoins to pay for your tax.
Right. But I'm saying, but you're liquidating Bitcoin, so then you have to pay tax on the tax, right?
Yeah.
In theory, right? Yeah. So, anyway, but it's an interesting use case. But we've seen a lot of different categories start to emerge. How about accountants? Are you guys going to start taking crypto payments?
Likely not. Cash is king.
Yeah, he's a sucker. How much is your cash going up in the last year?
One of the things actually somebody else said 2 panels ago is that when we go to audit a company, we cannot take their security, we cannot take a note, we have to be paid in cash. It's by our regulations, and that is for our independence, and so we're not tied to the company in any way. So,
right.
If Bitcoin might be one thing, but definitely if someone's doing a token offering, we 100% could not take that.
I think all the sort of the cryptocurrencies that have had organic mining, like you take Bitcoin, Litecoin, and some of the newer ones like Nexus, those aren't going to be considered securities because they have they weren't an ICO. They never actually had an offering, and so there's sort of no security aspect to it. Do you guys agree with that?
No, I'm not familiar with that.
No. Out of their wheelhouse.
I think you should speak a little bit on that.
Yeah, no, I think if you think about it logically, the ones that just started mining on a certain day and have convinced miners to mine those coins, to me that very clearly passes the Howey test. I'd love to hear opinions to the contrary, but I think even the SEC recently that was sort of their opinion. So
you mean like the coins that started from zero and then?
That's right. And so they've had sort of organic growth. It wasn't sort of somebody who priced their offering. Okay, we're going to come out and we're going to sell it at 50 cents, and then once that's over, it's now $1. And they've sort of set those prices. And what I don't like about that is, number one, you don't get actual price discovery of what the buyers think it's worth. You just know it's that price. So from one side, they've left some money on the table, and from the other side, they've set an artificial price. So you don't know really what the market price is.
But in those, what's the underlying asset? I mean, when we think about investing, right? If someone's going to think about investing in one of these coins, in a traditional, let's say, in an STO that are going to be coming out in the next year or two, there's an underlying company that creates a value, and if the people are mining these and it starts at zero, how does the value get created? What's the underlying asset? Well,
there's a couple of them that have mining that goes toward things like development and marketing, and part of the mining reward goes into a specific pool. And so I know that Dash, for example, does that. Nexus does that. There's a couple of others that have that. And those are part of the mining rewards, but the people have voluntarily done the mining, and they know that that's part of it, which helps to build the ecosystem. So I think you have to start to think of it differently. If we just go to the same constraints that we've had, we're not going to innovate. So I think we have to be able to rethink these things and push the lawmakers to make laws that are going to agree with the way the industry is evolving, as opposed to trying to stuff us into the confines of what has been. Because depending on, you've got the SEC, you've got the CFTC, all these guys, the FDA, they could even taste like chicken. I mean, all of them want to regulate this. So why can't we just, say, hey, this is actually a new asset class. Let's regulate it differently.
So try to get Congress to do their job?
And we're working on it. Through the Chamber of Digital Commerce. Well, we already saw during the Facebook interviews how much Congress knows about technology.
Yeah. That was great.
But there's the Chamber of Digital Commerce, which is doing a lot of work. They've helped to create the Blockchain Caucus. I do recommend anybody who cares about the industry and wants to see it move forward. The largest trade association, the Chamber of Digital Commerce, is a great organization. They've been very active. I participated on the Educate Your Congressman Day, where a bunch of us flew in and spent an hour with 8 different congressmen or senators, and you sort of told them about blockchain and how they should be thinking about it. But the Blockchain Caucus is another group within Congress that is gaining some momentum.
Steve, I would love to know, and Sebastian as well. We work with small companies every day, right? And this is a conference, and we walk outside to Staples Center, and 99% of the population doesn't know what blockchain is. In fact, when you ask them about blockchain, they're like, Bitcoin, right? And Bitcoin essentially has such brand equity, it's become the Kleenex of tissue paper, right? And it's what is it going to take? What's it going to take for the small business to accept the payment? When is it going to tip the scale of market acceptance from kind of the early adopters and the market laggards to, hey, I'm going to pay my gardener in Bitcoin or some kind of token security?
Yeah, and I don't think that it really comes down to what's the need. Why do you need to use a cryptocurrency versus another form of payment? So where you see the most friction is in cross-border payments. That's where cryptocurrencies do an outstanding job. There's nothing that matches it. You'll see that with the Opskins wax. I think Malcolm was up here earlier.
Asset trading.
Yeah, asset trading, digital asset trading, and international payments. I mean, the friction in trying to get payments out to a large international population of, like, you have development teams that are all over the world now that are, developing for projects commonly. Try to get them paid through these companies like TransferWise and these other ones. I mean, they just get raped. And if they can use crypto and teach them how to, get liquidity on the other side when they need to pay their bills, I think that's
how long do you think that process is going to take? Because from what I know, like, people have no idea what we're talking about now if you go outside on the street.
Right, yeah. And how long is it going to take? I mean, I think if you look at credit cards, it took about 30 years for credit cards to go mainstream. So I think it's going to get down to the point where you have loyalty systems or you have some other reason that they're going to use. I mean, that's why credit cards got so popular. They put these loyalty systems in place and made us slaves to it. It was a brilliant move by the card issuers. But
I like my free flights.
Yeah. You think they're free?
No, but
There's no such thing as a free lunch. No, I know, but I still like them.
We all do. So. Okay, you want to open up some questions from the audience? We got anybody in the back on the right? In the glasses? Oh, it wasn't you? Okay, right here.
Do I get what? No. So, I mean, what happens is when you file your tax report in Switzerland, some of the states, it's not like nationwide, it's statewide, they offer you the option, okay, you can either transfer money to us for the taxes, or you can even pay with Bitcoin. But then again, it's Zug, which is like the crypto valley of Switzerland, and they really use it as well as a showcase. Like, they want to be they're marketing themselves as the crypto-friendly canton, which is the state. So that's why they accept.
If you have a question, keep your hand in the air so they can get around to you with the mic. I know the gentleman in the glasses back there has one, but see if we can, if you don't have a mic yet, see if you can at least use a powerful voice. Here we go.
Hi, Dimitri. Mainly over-the-counter trades now. Question is, why you confusing kind of crypto, which is of the bank system, with the actual on-the-system payments? And when I hear a clarification in terms of taxation, so let's say if you kind of use the crypto for pay your taxes or whatever else, you became more visible for the government or for any other regulator. So the question is, does it make sense still to kind of pursue crypto payments in terms of the systematic payments?
I don't think we're very clear on what you're asking. Sorry to say, we were all trying to listen closely, but all the sound's going that way away from us. Can somebody summarize what he said?
Let me try a second time, okay?
Okay, keep it brief.
Yeah, so why are you confusing the actual crypto, which is kind of the banking system, with payment flow and payment use case for the taxation payments, let's say? Because they would be transparently visible for the government, which means, and for the other authorities, which means there is no point in crypto besides, like, e-dollar or something like that.
I don't think you talk about government coins. Is that it?
Not really, because the government coins, they are just obsolete, right? There is only like Venezuelan, speculation on this petrodollar. But what about actual crypto, let's say Bitcoin, which is like more like a gold, versus, let's say, like nano coins, which used for, let's say, payments, for the actual payment transactions? So why confuse
Is,
the
is it more of
crypto?
a question or a statement?
Yeah, I don't know. I think you
Yeah.
have the audience stumped. I'm sorry,
Yeah.
we're going to have to move on.
No
because
problem.
Nobody's quite. Gentleman right here with the cool tennis shoes. Yeah, you.
Hi, my question is for Dave. I'm Jarrell. I'm a CPA as well. And one of the issues that I'm coming across, like you said, is like the people with the long spreadsheets with trades on them. And I just want to know if you guys are using or beta you have anything in the beta process where you can like kind of take those transactions and process a report like TD Ameritrade may do or something like that?
That's a great question, and 100% no. I mean, this is literally kind of happening for the first time. I mean, we put up a blog, and this is well known that between 2013 and 2015, there were 900 people that claimed gains on their taxes in the U.S. 900. We definitely know there's more than 900, right? So if the government wants some money, you know where they're going. Now, one thing that, like, one group that I talked to yesterday, one of the very few that I'm like, okay, this is a really good idea. They're actually outside. They're called TaxBit. And they're creating kind of software, I think, if I'm getting it just right, where they can kind of API into somebody or, you know, hook into somebody's system, and then they can basically follow the trades and calculate the gains and losses and stuff like that and then give you a report. And they're also going to allow you to kind of escrow some funds to withhold enough to pay the taxes on it. But, you know, talking to them, there's also some things that they haven't figured out in terms of the, you know, the nuances. But I think that's about the best I've seen so far, or at least talked to.
Cool. There's a gentleman right back here on the right that's been very patient.
Thank you. My company makes payments to micro-influencers in cryptocurrency and enables them to purchase products in our marketplace. And there's a lot of ambiguity around where the tax burden, who bears the tax burden. Any information there?
You know, one thing I would say is that if anyone has tax questions, our tax guy is here today at our booth. We're in the middle of the room over there, and I'm sure he would love to talk to every single person here. But he'll probably give you my card. The burden is always on the company, really. I mean, if you have to produce a 1099, it's your responsibility. If you're giving them over $600 a year and they're like an individual, and if you don't do it, yeah, the IRS could come at you for like $100, $200. I can't remember what the penalty is, but they could come after you, and then the burden is to also on the individual receiving it to report it. And they
So
should.
what happens in the scenario where you give somebody $599 at spot rate when you give it to them, but then it appreciates and the coins are worth?
It's whatever you give it to them at. And this is the biggest problem I see with the STOs is that the mechanisms to track all this stuff don't exist yet. So if you're trying to utilitize your security token, that's a big issue because it's one thing to pass around fiat currency. It's a whole other thing when let's say your point of sale system has to know exactly what you sell your maybe a meal for and taking a token at, and then exactly what you give one of your best customers as a loyalty point at, because that's all a taxable event. And it's all a gap reportable event if you're doing a Reg A plus as well.
So is there a tax advantage if you want to support, for example, the Chamber of Digital Commerce, and then I give them like 5 Bitcoin, let's say, as a donation? They're a 501c3 organization. Is there any tax benefit to that?
Talk to my tax guy, but I assume, yeah. I mean, there's probably the same thing as giving artwork or property. There's probably a taxable benefit, would be my guess.
That was shameless, I know. Any more questions? One here right now. How are we doing on time?
Is there still more time for a question?
One more?
Do it.
5 minutes? Okay.
My name is Wolfgang Strasser. I'm the general partner of a blockchain investment company, and we also recently started the United States Blockchain and Cryptocurrency Association. And the job of that organization is to do some lobbying work in Washington, and we're currently collecting proposals for reasonable regulation. So feel free to contact me after this talk with ideas.
Is there a question? I'm sorry. Or was that just an advertisement?
Sorry,
I wasn't sure.
This is an industry organization, so it's not advertising.
I see. Do we have any other questions?
Question, have you guys heard of MetaPay?
Is this another advertisement or is this a serious
No,
question?
it's not.
Okay, it's called MetaPay?
MetaPay.
Oh, MetaPay.
Yes, shameless.
I
of course,
can't say that I have.
Here's the question about crypto, right? So most crypto cannot get out in cash, US dollars, in a very easy way. And the payment platform POS right now, in my opinion, has been very slow, the scalability issue. At the same time, there's not enough incentive for people to get in and out of crypto into cash. So again, call it as a question, but really what we're trying to do with Metal Pay, MTL sticker symbol, is that actually we incentivize people.
Okay, all right. So
Shameless,
there's plenty of
yes.
ways to
Everyone share
do.
the coin, why not me?
There's plenty of ways to do to fiat, and actually, point of sale is dead on arrival. We tried to do that years ago at GoCoin, and it's just a terrible use case to do point of sale at this stage, especially with Bitcoin. And with some of the newer coins, that'll be about faster and better performance. You'll see better. There was one more question over here. Let's hit that. There's going to absolutely be a stable coin that catches ground. I mean, Tether has done a phenomenal job for us at the exchanges being a stable coin pegged to the US dollar. I'm sorry, did I cut your question off too fast? No, I think No, I think that's the most important part of having payments work is to have a stable coin where the merchant doesn't have the risk of conversion. That's the whole thesis behind BitPay, GoCoin, and Coinbase's merchant offering was to get them safe at fiat, and then we would assume the risk. But if we could flip immediately into a stable coin without having to flip to fiat and even work the payments and net the payments out, that's really when the ecosystems can start to build. And that's where I get into the utility of a token like this, where you don't need, you're tracking what the balances are. You're using the ledgers as they would naturally be used. Do we have time for one final one here? Let's do it. I'll defer to the accountant.
Well, I don't know, but I know this. If governments were smart, they would totally grab onto this, create some kind of government token that you have to exchange in and out of and tax you at every single transaction. Because then there would be no more tax evasion. They would be prepaid on all your tax payments, and they would be the richest entities in the world. So you should hope that the governments get involved if you want a rich government.
Okay, let's just play the game because we all like to play it a little bit. Give me the price of Bitcoin December 31, 2018. I'm sorry, we have one more question before we put these guys on the spot.
Yeah, one more question. In terms of the accounting for payments and so forth, it sounds to me that that's a problem that's best solved by a large corporation like IBM. And I know that they've been doing a lot of stuff in blockchain. Have you guys had any contact in terms of getting larger corporations involved in setting up the infrastructure for this payment?
With respect to the payment of taxes and the calculating of it?
Yeah.
I mean, I'm not aware of what IBM's doing in that space. I mean, I'm familiar with whether their projects in Hyperledger and what they're doing in enterprise, but not so much what they're doing in the tax space. But David, any ideas, thoughts on that?
IBM? I couldn't even get the door of IBM. I have no idea what they're talking about.
Yeah.
There's no way they're giving away that information.
Right. So.
Thank you.
Okay, let's play the game. Who wants to play? Let's play it over/under. So, are we over or under $20,000 at the end of the year?
I don't know, but I liked your first question because I already had an answer for it.
Okay, go back to the first question.
It's 1 hour of my time.
That's brilliant. Well done.
The other question?
$195.
Under.
Sorry.
Under.
Slightly under.
Slightly under. Okay. Well, thank you guys, everybody. Great audience. Appreciate all the participation.